Hello. Mic test. Hello, guys. Sorry about the delay. It looks like we are quite late this time. Let me check the technicalities before we actually begin with the broadcast. Just checking the audio at my end. Hmm. Looks like it's working. Somebody is already in chat. Martin. Looks like it's working. Yes. So, guys, without any delay, let me just get over with the stuff. I'm quite late today. So first of all, with the legalities here, the disclaimer on screen, basically presenting or suggesting that, telling you that all content presented here is for educational purposes. You're not soliciting any buy or sell. If you do want to use the views presented here for your trading, investing, you yourselves will be liable for profit, loss of profit, etc., etc. Right. And with that being said, let's have a very quick introduction here. My name is Nirav, guys. I'm the admin owner of 50 Years Market Analysis website as well as YouTube channel. And here you are with us for the 105th edition of the Trading Opportunities webinar. In the past 104 webinars, which we have done all live broadcasted on YouTube as well as LinkedIn page, we have captured, let me see, 236 trades. All 5 trades discussed in the last webinar played out. So 236 in 104 webinars, right? All these webinars are connected live and we go live every Friday at 7:30 p.m. IST or 2:30 p.m. GMT. 2 p.m. GMT, I think. Right, so just convert it to your time zone and you can catch us live every time we go live on Fridays. Right. Apart from this, I'm also the admin and owner of 50 Eyes, as I told you. And since I've been doing these live broadcasts and YouTube videos, etc., since a quite a long time, I have kept a track record of all the stuff I have said and done since 2016. Let this page load up. There will be a track sheet here. You can, by the way, check it by visiting 50hours.com/forecast accuracy. So since 2016, I have kept a track sheet and the accuracy has remained above 83%. 80% for all 6 consecutive years. 2017 is 87.5, 2018 is 84.6. You can just scroll down, check the date, the instrument name, the analysis, and what was then happening. And you can just check the YouTube link as well here, right? So all of this is pretty well documented. For everything that worked, we have given it a +1. Things that didn't work, we have given it a -1. And if the trade is not initiated, it's of course 0. So it's all well and good placed here. You can check in 2020, we had like 61 analysis, 54 played out, 7 did not work as expected. We had an accuracy of 88.52%, so on and so forth, 2021, etc., etc. And since 2022, we are doing this weekly webinar series for which, as I just told you, we have captured 236 trades in the last 104 webinars, right? That's about it for the quick introduction. And if you want to learn the thing that I use, which is the technical analysis methodology or the Elliott Wave analysis, which I use, then you can just head over to my website 50hours.com and you can then check the video course, which currently has 1500 students and 4.9 rating on the public platform, which is listed down. I think I'm the top rated instructor there. I don't exactly know, so don't take my word for it, but what does 4.9 mean anyways? So that's about that. What else? What else? Yes, most important. Tomorrow we will be conducting a private webinar, guys. So if you are not enrolled already, just head on to this page, which is currently in front of you on screen. This will be a completely private webinar. Once you register with your email ID, you'll get the link to log in. And tomorrow we'll go live at 8:30 p.m. IST, right? So 8:30 p.m. IST, you can just convert it to your time zone by clicking this thing, this button, and just selecting your country. It's currently not showing the list because I've turned the whole thing into black thing, and the black theme does not work always properly. So anyways, you can select your country from this drop down and check the timing. What is going to be discussed in this webinar is we'll just check over my broker records, my track sheet, and how I was able to make around 65 something percent, 64, 65% roughly speaking in the last 6 months. We'll go into deep dive what instruments I'm trading, which was the most profitable, the number of long trades, short trades, etc., etc. Right, and this is also the announcement for our upcoming trading program, LT Batch. Right, so we'll be starting next week. So if you are interested in that, definitely attend this private webinar. and I'll tell you the details for the upcoming batch as well near the end of this webinar. But in either case, if you are interested in attending our private classes or not, you should still attend this webinar. It will be having value in its own right. So that's that, right? Leaving that apart or aside, I should say, I'd like to now continue with our webinar. And first of all, I'll just check on one quick thing here. Yes, all is well set here. So it looks like the chat is there also, and I'll just give you a quick outlook of how this webinar will proceed. We'll first go over the chart of Euro USD, followed by crude oil, followed by gold, S&P, Nifty, and at the end Bitcoin. As I said, all the setups we discussed in the last webinar have worked, so we'll look into that as well. Overall, I think it's 100% month. Like everything we discussed in the month worked out, at least in the Slack group, right? So without any further delay, let's head over to our first chart of 1 second here. I should probably book my profits here on gold, the remaining longs. So it has a tower target. But anyways, we'll cover that once we get there. We can let it run for a while with our SL place here. Alert for SL placed here. So first of all, let's get started with our first chart, which is a chart of euro, and euro has actually worked out precisely as per our analysis in the last webinar. Now, before going towards the chart of euro, let's just quickly have a look at what we discussed in the last webinar. And before that, let me just quickly check our live chat here. Hello, Martin and Sushil. Yes, Sushil, sorry about the long delay. I was actually outside, and I knew about the webinar and everything, but it took me some time to come back. I was just with friends, and you know how these things go. You sort of lose the track of time. But anyways, everything was well said, so I was able to cope up within 20 minutes. Yes, Martin, I am well. Thank you for asking. Hello, Byzantine Jewelry. Okay, so Martin is registered for the meeting tomorrow. That's good. I'll see you there in the meeting room. And hi, Jay. So with that being said, let's now first check our chart of Euro USD. First of all, here on screen, I'll just quickly load the last webinar's recording. Where is that now? There it is. So 104th webinar conducted on 1st of March 2024. The analysis is as you can see here on screen. I'll just mute the audio. It's already at 1080p. And let's see what I was saying on Euro USD in this recording. Right. So what I think is, I mean, it's quite clear. We were expecting that it will give a correction for A down, B up, and C down, and then the market will take out this high. Let me just play that video again. Yeah. So that was the expectation. Now it has actually performed like that, and I was already in the trade and I took the longs. This was a discussion over here somewhere. 1 second. Yeah, somewhere here we were discussing this market. Over here, the idea was that once this C down is complete, we expect the market to take out this last high of wave A. It did that. I was long. I exited first longs, I think somewhere here. Then I think I exited some here as well. I'm pretty sure I took 2 long trades at different occasions on this counter. Both were closed in profits, right? So that was the discussion from last webinar. Pretty much played out the picture perfectly as per analysis. So if you were there, you would have had a pretty good idea of how to play this one. Now, looking at things as what they are doing right now. Right now, I think I'll have to consider one possibility here that this is here, this is here, this is here, and this is there. Let me remove this. Okay, now that goes out of the picture. And now let's see what's going on. So there are now 2 possibilities which exist here. First of all, we can very clearly say that this is the main structure we are looking at. Right now, I am considering 2 possibilities. One is that the B is complete here, and second is that the B is complete here. Now, both are possible because it can be counted as a running flat. This is the structure of a running flat. Now, not getting into too much technicalities, if we consider that, that's fine. Otherwise, we can consider this as simply ending here, right? Simple zigzag kind of structure. Both are perfectly valid counts. If we consider the B ending here, this as our point of reference or the starting point of the wave C, then we can say that this is our one, this is our two, and this is our one, two, three, four, five. Let me see if there is an overlap. There is none, I think. Yep, there isn't any overlap, I think. Yes. So technically, we can say that if this is the end of the B, we can say that one here and two here, and then one, two, three, four, five for three here, perhaps a sideways movement, and then a five up, maybe remaining, right? And at the same time, when I was reanalyzing this market after our webinar or last webinar, I realized that this structure is not really the cleanest of structures. I had counted it as a diagonal, but I'm not very sure about that. It does not have the right look. So here's the guideline of right look by Ralph Nansel Elliott from its original work, Nature's Law Secret of the Universe. He states that if a structure does not look like a proper wave structure, then it probably isn't. That is basically he was stating that if it does not look right, it probably isn't right. So what I'm saying is that I'm not very sure about this wave A, right? So what else might be the case? Maybe it's a complex, maybe it's a W. And if we take it as a W, now here's the thing: if it's a W and if this is an X, then we can pretty much count this as an A of the Y, B of the Y, and this will be 1, 2, 3, 4, 5 for the C of the Y, right? So that's done and dusted. Now, why am I pointing this out? Because in a WXY correction, we will have a structure like this: one leg up, correction down, and this correction is called an X. And once the X is complete, we have another leg up in three waves. There will be an A of the Y, B of the Y, and C of the Y. So here's the cautionary thing here: if that is the structure, then we can expect this market to have a correction from here. That is, the market can fall from here, right? So I'll just go with our past analysis. Well, the long story short is that while one more leg up can be there, we are not 100% sure on euro. So if you were long, personally, I've already exited, right? So what else can I say? If I have exited, then I'll look to re-enter again. Let me show you when. So this is the channel here. If this is the structure which is going on, then we expect the market movement below this channel, right? That's the basic understanding. If, however, it was an A here and a B here, blah, 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 and C here, then yes, you know that it will go up again, because then it will be a 1 here and 2 here. By the way, guys, kindly tell me first that it's not getting confusing at this point. I'm discussing two different things here on the same chart. If you can tell me very quickly that it's clear enough, or do I need to repeat myself in the chat, that will be good. Right? So, and then what we have is a 3 here and then a 4 here for sideways and then a 5. So that will be the second possibility. We wait for sideways movement for 4 and then leg up. And if not, then it can straight away fall. So let's say hypothesis 1 is up, H1. Hypothesis 2 is down. So it's up and then down, and the second one is straight out down. So that's about it for our analysis. Let me check the comment section. Hello, Byzantine is saying hello from California, Nero. My name is Mark, big fan. Hello, Mark. Nice to see you here. I believe I have received some emails from Byzantine Jewelry as well. I think distinctive name, so I remember it. And yes, guys, as I said, let me know if there is any doubt on this one. Otherwise, I'll just move to the next one. I won't wait too much because we are already delayed. Martin is here saying he got the complete guide to professional trading Elliott Wave to supplement the webinar and giving myself until the end of March to try on my own. Well, Martin, that's good to know that you are enrolled in the actual proper course, so as to follow up with the whole thing. And yes, the webinars are supposed to be followed like that, that you should have gone through my work and then you are following the webinars, right? But I wouldn't say March end is a very good timeline. Elliott Wave is a complex thing, and you may think that you know it, but I would suggest you go through the course at least 3 to 5 times, literally 3 to 5 times. Because if you do it less times, you will understand half things, and half things you'll just make in your head, which will most likely be wrong, right? So now let's head over to our next chart, which will be the chart of CL. Again, a counter where I have booked some profits. There is an interesting one. Interesting one because we'll just discuss why it's interesting. Now, before going to the chart, let's do the formal drill. I'll just go over the live stream from the last webinar. Where is that? Here it is on screen here. And in the live stream in the last webinar, we had crude oil analysis discussed around. Let me just see where it was. So here's the crude oil analysis in the last webinar somewhere. Let's see what I was saying back then. Yeah, so I had discussed a few more things here. If you want the whole thing, I'd suggest you just go to the webinar 104th, right? And click on the crude oil part. This whole discussion is on crude oil, right? We don't have the time to go through all of this. Now, what I do recall very clearly was suggestive targets were 81 and higher. This was the alert line was, I think, around less than 81, but I think I did mark some targets. Let's see if we can play it. Yeah, but the main theme was that there was a cautionary thing here. The cautionary thing was the possibility that this market has already completed the wave C, and that was the important theme because if it had completed the wave C, it's completing as a diagonal, and once the C is complete, there's nothing left but down move. So this was not the main theme, but this was a thing to be watching out for. And basis of this only, I exited the long trades. I'll probably look into that as well, or show you the Slack posts on that as well. But let me see if there was anything else to show here. I'm just letting the recording play itself out. Where is the Slack thing? There it is. Where is this crude oil thing, euro thing, or channel, I should say. All right, so I don't see much of a discussion here. Now let me just go through the Slack. Here are the trades on euro. Complete or continuing. Where is the added minor longs with the idea to add more on pullback? Let me see. Yes, 1.08657. Added more longs at 1.08864. Closed longs with minor profits. Okay, so this is the second entry. This was not closed with anything substantial, I recall. And this was the first entry, but I think this was before the webinar. So yeah, euro, there were two trades and they were profitable, but this wasn't much of anything, now that I recall it properly. The crude oil was substantial profits. I think it was the biggest win of the week. But let's see what it was. Consisting long consideration of 80.35 re-entered longs. So this is the second entry. Let me see if their second entry was. Nope, this was not the one. This was closed without anything substantial. May look for flat correction. Where was the one which I... Okay, so we had a running position in crude oil, which was there for quite some time. And what I did was one second, I'll just look into the comments later on. Let me hide the stream for a second. So this was crude oil was hold for quite some time. We had entered longs much before the webinar, last webinar. There's the entries on February. I did more long, so I was adding on to the position around 78.445, right? And then exited up 80% of the positions around our minimum target at 79.618. So, and remaining 80 was, I think, trail hit or what? Let's see. Book profits on all longs around 78.37. So I believe I was building up longs on it and we were long quite before the last webinar. So that's why it was substantial. So you can check the actual entries by checking the last to last webinar. I don't want to scroll too much in the Slack thing. It will take a lot of time. Now, heading back to our current discussion on WTI crude oil. Now, the theme is very simple and straightforward here. First of all, let me just tell you, this is our point of reference. Starting point of this analysis is 67.814. I'll just call it POR, right? So this is where we start the analysis. The main theme is A up, B down, and C up, right? C up in the sense that possible diagonal consideration here, as you can see over here. Not the best looking structure again. That's why I'll discuss the second count as well. So this is the first count. This is suggesting that A up, B down, C up, which is basically this formation, a zigzag. A up, B down, C up is complete. If that is the case, then we will see some corrective move to the downside. It could go strong down, or it could be just a small wave for an X, which will then be followed by a new leg up. Both possibilities exist, but more importantly, I like to point out that it is also possible that this is just a wave one, this is a wave two, and this is a wave one of a lower degree, and this is just a correction for a wave two of a lower degree, and this will then be followed by wave three of a dot degree, or whatever we calling this one. So this, in my belief, is the more appropriate count at this point in time, because I remember the long-term count on crude was suggesting that a base has formed here. Basis on that, we have been tracking this whole leg up for quite some time. We got some trades here and there, and this one was a substantial entry. Multiple trades I had taken here, right? So based on that, what I'm saying is that we cannot consider the bearish count as our primary count. We have to consider the fact that the bullish count is probably the one which is being followed by this market, right? And if the bullish count is being followed by this market, we cannot ignore it. So how do we play it? By the way, guys, you are catching my speed. Is it too much or too low? Kindly let me know in the comments if it's all right. If I should continue with this pace or should I slow down, just let me know in the comments. Otherwise, I'll just keep maintaining this pace. And if you are not understanding it, then what's the point of the webinar, right? So just quickly let me know that it's fine or anything of the sort, right? So as I was saying, our main theme remains to maintain the bullish bias. So as Jay is saying, the speed is perfect. Thank you for that. And I have seen another comment here from Martin is saying, please slow down a little bit. Sushil is absolutely fine. So Martin, I'll just slow down a little bit for you. As a matter of fact, what I'll do is once I'm done with the whole discussion, I'll conclude it again for you. But maintain the pace a little bit here because everybody else looks to be fine with it. So I'll redo the whole thing at a slower pace. So what I'm basically saying here is that two things are possible. H1 is suggesting, or yellow is H2 actually, is suggesting that once the C is complete, it can go down. And the H1, which is the hypothesis with the, and why is the color not changing? Let me check. Yes, H1 is suggesting that we are still to see more upside. So both are counter. So here we have a contradiction. This is the upside count and the yellow count is suggesting that this is the B and this is the C. So if I draw the arrows, the yellow count is suggesting downward movement. And if I draw the arrows for the H1, it is suggesting this whole thing, right? Contradiction means basically we have to wait for something. We have to wait for something which is clear enough for us to get into a trade. And what is it? What we have to wait for here is quite simple. We have to wait for a confirmation by breakout, right? Now you might say that if the whole thing is coming out to such a simple thing, why even do the analysis? Well, most of the time it does not come to such a simple thing. So in this case, if the market takes out the high, what is 81.027, then we activate our analysis of H1 activation, right? Enter longs. H2 is suggesting straight down. Well, as I said, I am not really a fan of this count anyways. So even if the market is going straight down, as I said, it could just go for an X. So the down move can be minor as well. And our primary bias remains bullish, right? So as I said, it could be a minor leg down. So I'm not very interested in it. So that's why you can see two alerts placed on the upside. I want to be aware if the market crosses the high. I want to get in on the longs with the profits I've already accumulated, part of it, and trail this position. So Long story short, I am more biased towards the upside trade, not much biased towards the downside trade. Reason is clear. The risk to reward is very well for the upside and not that great for the downside. Plus, our long term analysis, which you can check in the last 2 3 webinars, is suggesting the same thing. So, concluding the whole thing, we have two analyses. If you follow the yellow one, you will find that we are discussing an A up, a B down, and a C up, which is what you call a zigzag correction. Once the zigzag corrections wave C is complete, we expect a downward movement. Now, we do not have confirmation for it, and the long term count is not very much in favor of it right now. So, I'm not taking any trades for it as of now. Remember, things can change. I might take a trade on it Monday if I have some evidence, but with the picture I have on chart right now, nothing looks that clear enough, right? Now the second count, let's discuss what that is. The second count is this one with the different color, the reddish pink color, whatever this color is precisely, I don't know. And you just focus on this color and you check the one up, the two down, and then the three up, right? So what I'm really discussing here is the structure of an impulse. I can draw it on the right hand side. This is the one up, the two down, and this is the three up in play. And within this three up, because of the fractal nature of Elliott wave, we will have five waves inside of it, right? And the five waves will be one up, two down, three up, four down, five up, right? That's all there is. So this will be your one up, and this will be your two down. Now, if you look on the actual chart, this three is the one which is playing, and this is the one up and two down in play, right? So long story short, this is the count we look to follow. As soon as the wave one high is broken, this high is broken, we look to go long. I think that's clear enough for you, Martin. I have discussed the whole thing again with the explanation. I think we have spent enough time on crude. Anyways, if there is still any doubt, you can just let me know in the chat and I'll just look into it. And let me do check some of the past comments. I think we have missed something. Martin from California. Hi, Mark. Yes, we have checked this comment, and Martin has enrolled in the complete guide to professional trading. This is the new comment, I think. Amazing advice. Also, budget on enrolling on your Slack group to help get my feet wet, which I still learn. That way, I won't have pressure and will take the time to learn. Well, I'll suggest, Martin, you go through the video course first 3 to 5 times, then check at least 5 6 of my past webinars, recent ones, of course, right? And then plan on the Slack group, not straight away. And what's that? Speed is perfect. Well, we have already covered them. Someone is asking, are you drawing those waves using your mouse or a drawing tablet? I'm using a mouse. I did used to use a drawing tablet, I think years and years ago. But I mean, it's so unnatural and not required. Anyways, so if there is no doubt here, so we'll just move on with our next analysis, which will be the chart of gold here. No doubts here, so I won't waste any time here. Gold, I have to exit or decide on exiting at least. Gold is an interesting one. I'm not considering this. Let me just quickly just show you guys our last webinar before discussing anything. So let's see what we were saying in gold chart last time. What is that? Okay, so yeah, last time we were discussing the bearish count because that was our main theme. And the only time I was thinking of bullish was that if the market established itself above a high. So let me just zoom in. So keep in mind, guys, our main theme on gold was swing perspective bullish, short term perspective bearish. So I was not holding any position on it, right? But last time we discussed that if the market establishes above wave A high, which as you can see, let me just play the video. Am I saying anything here? No, actually that was the point. So if the market establishes above the wave A high, then I'll look for long. Right now, let's see what happened here on the actual counter. Well, it has gone above wave A high. Somewhere here, I did add longs upon the anticipation that it will break it. Right? I can check literally here. So why guess anything? Okay, 1 second. I forgot to turn on the text thing at the bottom. Where is that? Yeah. So gold. Added more longs, added minor longs. Is that there? It is a long consideration of 2130. So we have added longs. What? 2130? Typing mistake here. Or am I really gonna wait for 2130? Let's see when did I add longs. I did minor longs with the idea to add more on pullback. Right, so I did not wait, of course, for that. I did around 2108. I did more around 2129. So around 20 points movement already, 20, 21 points. And this is 2129 itself. We look to add more on pullback. Nothing new here, booked partial. So we booked around 2161. So that's 2108 was our original entry, or the first entry, I should say. And that is quite a move. I have booked 50% here, I remember very clearly, because I was talking to Sushil, who is currently in the webinar when I booked this. So 50% I have booked, and now let's see where the market is at right now, because I have 50% open. So it's at 2171, 10 points more we have. Now let's see what difference or what second opinion we have regarding this movement. I think we have what we will call a say possibility of one more leg. So don't take these things literally. I have run out of the wave nomenclature, so I'm just changing the colors for it. Like we are already at the lowest. We already have the minuscule, so I can't go any lower. That's why I'm just using a different color with the circle. So, anyways, the theme here is that this is the one up, this is the two down on gold, and this probably is the three up, four down. So one more leg up might be remaining. By the way, keep in mind we cannot take this count very seriously, because this is supposed to be an exceptionally important resistance level of 2184. As you can see, these were the two important ones. One was 2146, right? And the other one was 2184. Now, both of these have been touched. So that's why I'm saying we cannot take this one leg up remaining very seriously, because our second target has already been touched. So that means most of the traders would have booked profits here. Many of the traders, because it's not just my target, I believe. I mean, if it was just my target, then it wouldn't work, right? Would it? Common sense. Anyways, the point is that if this count is wrong, then it's possible that the three is here. I can just remove it. Then the whole thing can itself be counted as a one up, two down, three up, four down, five up. This is the one, this is the two, this is the three. Yes, I know that four is a little bit smaller, but these things do happen. So this could be the four, and this could be taken as a five up complete here, right? So that is definitely possible. I'm not going to hold anything major. So what's the solution here? I do want to wait a little bit, because secondary possibility is, 1 second. Let me show you the updated count. By the way, we have updated a few things here. So this is the updated count, not the one we have been following for quite a long time. This count suggests that from this point of reference, which is the price level of 1615, we have completed a wave one here, and this is all a correction. 1 second, 1 second, 1 second. I'll just put the count on A up, B down, C up. Yes. Now I'll remove everything. So this is our expectation. So basically, if I remove this part, it will be something like this is our expectation. So a correction is already expected, because we are assuming that this dot B within this flat structure Let's call this a circle A, call this the circle B, and then call this the circle C. So the dot B in the structure. Let me check one more thing very quick. Nope, this is also the possibility. 1 second. Now this is the count, not the best looking one, but let me show you what I'm trying to say here. Now we already have an established resistance placed around 2184, right? So this is a possible reversal level. So considering the possibility that B may have become a triangle, I'm not wholly in favor of it because the wave E is not very clear, but generally that is the case in triangles. So this is A up, B down, and C up, in which case 2184 is already hit. This is where the market has touched. So it can reverse from here. So because the level is hit, I am considering a lesser probable count here. So I'll do one thing here. I'll just move my trailing stop loss to somewhere around here, 2156 or something. After this webinar right now, I'll just hold wherever it is. Now there are two things which exist here. Either this count is completely correct and we will see a correction for wave C here. It can be a minor correction going to 208. It will at least go to 2080. And I think it should go below 2050 actually. This is the second alert. It should go below this level. We do have a lot of support here. So around 2050 to 2020 something, somewhere within this range, we have a support forming. Somewhere here it can go, right? So as you can see, the move down can be substantial and my entry is 2106. So I cannot hold this big of a move, right? That's our main theme. I think this is the main idea. I'll definitely look to re-enter if the market does allow us to re-enter by moving like this for the upcoming leg, which will be the leg for wave 3 if this count is correct, right? Now, the second thing is this whole thing is not going to play out, right? Do let me know if there is any doubt on this first analysis. I'm now shifting to the second analysis. I'll call this one as our H1. H1 is suggesting that we have a down move, then an up move. And now we'll shift to our H2 analysis, which is suggesting that we are in a series of nested ones and twos. I'm not wholly in favor of this analysis. And you can see why it does not have the proper look. So if that is playing out, then this could just go fly high, right? Then there's nothing to talk about it. And we probably wouldn't get an opportunity to enter this position as well. And completely possible because that's how bullish markets work, senseless structures and all that, right? So it remains our hypo 2 suggesting straight up move, nothing else. I won't discuss more on it. If you have any doubts, do let me know. By the way, if you are clear on it, why not let me know? It's a live webinar and you guys are already there, right? So to conclude, our analysis on gold is suggesting hypo 2 or the less likely scenario is super bullish, ultra bullish, and it is just straight up movement, right? It is only playable if you are a swing trader and are holding from not swing, even long-term trader actually, and you are holding since these levels or something, right? I'm not doing anything like that. I'm just a short-term trader anyways. So my current entry is around 2106. Actually, that was my first entry. I think the second entry was 2123 or something like that. Whatever. So my entries are somewhere here, right? So I'll have to consider H1 a little bit more seriously, and it is also our main hypothesis. H1 means the major theme, and the major theme is suggesting, as we did point out earlier as well, that a correction might be expected. I'll just change the color here. What's going on here? The correction might be expected from here, which can end somewhere between 2050 to 2010 something, somewhere within this range, roughly speaking. Just check it on whatever chart you have. I'm using this data feed. Just use the ticker XAUSD FX feed, right? So That's about it for our discussion on gold. If you have, as I said, positions, I mean, I don't know about you. My positions, I'm just gonna trail. If things have to fly from here, my trail, if it's hit, then I'm out. If it flies, I'll just re-enter above it, right? If not, I'll just let it hit the trail, or maybe who knows, book later on. For right now, I'll just trail it somewhere around here. Can be a little bit more specific, perhaps. That's about it, guys, for our discussion on CL. We are already out of. I'm already out of half of my longs. One second. Let me know if there's any doubt. Otherwise, we'll just move over to the next chart. I'm just checking something for myself here. 3 for 5 for 3 and down for 4 and up for 5. Let's see if that fits in or what. Somewhere around 2147. So a little bit above break even for my entry. By the way, if it does go up, we have 2223 followed by what is this? 2250 as our upcoming levels. Hmm. Yes. So not putting any more time in this. Let's now head over to our next chart of S&P. I don't see any questions or doubts, anything. So not much point stopping here. Here's the chart of S&P. Here it is. The chart of S&P is 500 from our last webinar. The discussion was somewhere here. A case, and it was a very clear enough discussion. I don't think there was much to say here. Now, by the way, before we continue with our discussion on S&P, if you are still in the webinar, watching it live or watching it as a recording, first of all, do hit the like button if you are liking the or enjoying the content. And much more importantly, if you have missed our announcement at the beginning of the webinar or are not reading the scrolling text below, we have a private webinar scheduled for tomorrow. You can register for it by heading to 50s.com/webinar registration. We will, of course, be checking out our broker statements, blah, blah, blah. Some private discussion. There will be no recording for it. It will be just live only. It will be definitely of great value. And if you are interested in our private personal classes, then also this will be a starting point for you to figure out what we'll discuss, what we do discuss in those classes. So whatever the case may be, you should register for it. There will be, I mean, value here. That's the proposition. Heading back to our analysis, let me just play this and see what we were saying. It was pretty clear nested impulse formation on S&P chart. Nothing much here. So as you can see, I was just saying that it can just go up from here and minor correction. I think I was pointing out or whatever. Let me just see. Yeah, that was the basic theme. We were saying that it's heading up for 1, 2, 3, 4, 5. The price was around, let's see what it was at 5098. Of course, it was discussed on last Friday in live market. Now let's check the actual chart. 5098, and let's see what the actual chart is at. Right, let's see. Where is it? Where is it? That was our discussion in the last webinar, somewhere here. Somewhere here we were discussing in the last webinar. Right. So now since then, what happened was I counted the internals. It was a 1, 2, 3, 4, 5. This was all posted in the Slack, by the way. The impulse was complete here, and then the correction was here, and then I exited some before this fall, some of my longs. Then I have re-entered, and I'm currently still holding longs. I can think you can just check that. Where is that? So these are the posts on Slack private group. Where's that? Where's that? Booked partial longs considering possible impulse completion, trailed the remaining longs to 5,000. So by the way, I was holding longs on this one for 2 weeks, I believe. So they were being carried forward, and they were just accumulating profits. So we exited some at 5134. Profits on all longs. All were closed at 5120. So as you can see, we were already anticipating this impulse. I don't think we were able to discuss this in the public webinar, but as I said, things do evolve. I cannot discuss everything. And of course, if the chart is giving new information, then new counts will only come to light afterwards, right? So this is the information which came to light later on. And noteworthy point is we were able to exit before the actual channel break. Well, that's good enough. Partial exited above it and the remaining below it. I could have gone short or anything like that would have been possible. Did not want to go counter trend in a strong bull move, although short term wise it could have been done like a scalp or something like that. But anyways, that's fair enough, and that's where we exited. And afterwards, let's see what else have I done precisely as per analysis. It's going down, updated count, blah blah blah, and re-entered longs around what is this 5128. So currently we are long with the entry at 5128. It's currently at 5187. So what do you know? This one is also in good profits. Now let's look at the actual counts here. By the way, Martin, are you getting used to the speed? I think you had requested to slow down things a little bit. What about the other participants? The chat seems to have slowed down or completely washed out. Are you guys gone? Were some of you just here for gold analysis? Because that was the title of the webinar. What happened here? I can't see anybody in the chat. I mean, typing while people are online here. Anyways, what we are seeing here is nothing new. The count remains the same, literally just what we discussed in our last webinar. Right? Jay is here. I keep participating, guys, here and there, responding to the questions which I give you or ask you, of course, not give you. So yeah, coming back to our S&P chart, what I was saying was literally nothing has changed. It's the same count, same things going on. What you can see here is a deduction which is here on screen, which I should make further more clear is if we take the whole thing from this point of reference, I'm not talking about the bigger picture or anything. You are interested, you can just check the last webinars. Then we have 3, 4, 5, right? So we have completed a wave 1 here. Now I'm just discussing the main theme here. If the 2 is complete here, that's well and good. All right, Jay. So now if the 2 is complete here, that's well and good, right? That means it's just flying here for the next leg, right? Right. If it is flying here in the next leg up, I mean, the general strategy for these things is to just trail the thing, right? I only exited because I was anticipating this fall. So once you see it, you have to act on it. So instead of going short, I just closed my profits near the top, which was quite substantial, so I had to book them anyways, because if I don't book it, it's just paper profit, right? Now the simple strategy will be to consider this two as the invalidation point. So if you are holding the longs from a lower level, the trail goes here. Actually, if I was holding from a lower level, my trail would have gone here, right? But I was not able to hold it. I actually exited at the top. Now I'm exiting, not exiting. I'm currently at around 5128 something long. So what I look to do is I look to trail my stop around 5114 something, and if it continues up, I'll accordingly increase my trail, right? So that's the strategy for this kind of markets. I don't have any real. I mean, we can have an estimate. We can look at targets, but we don't have any idea where this leg up will stop. Because if it's a super strong bull move, you generally never know when these things will stop, right? So if you don't know about something, some things end, then that's the only way is to trail the thing, right? So that's what we are gonna do. We are just gonna trail the damn thing. Now we have a general idea of where the targets are. We have plotted them in the past. So they are incoming at 5212 and then 5394. So I'll just say 5400 and 5210. So these are the upcoming targets to the upside. And as I said, if you have a good entry, you can keep trailing it. 1 second, let me just push this alert as a long only, or once the upside is taken. What's happening here? Not able to see the alerts which I just placed. Sometime it happens. The alerts will be visible once I refresh. Should be at least. Yep, there they are. So the ideal strategy will be wait for this. I'll decide to book or not to book around 50 to 10, near like around 50 to 06 or somewhere, right? And for now, I'll just trail the thing around 5130 something. So that will be around break even for me. Right, nothing much to add here. Uh, if you can hold, these are the levels for upside. If you can't hold, then pullback strategy will be to wait for pullback. I think I have a question regarding this from Martin is asking belong in the major trend. Well, I will not recommend anything like that. These things are not something I can answer straight off, Martin. You should know. There's the reason I show a disclaimer here. What I can tell you is my position and my outlook on the Elliott Wave perspective of the market. To buy or not to buy is up to you. It's your money after all. Right. So since I'm already long, I'm telling you guys that I'll currently move my trail around 5130 level. Right. Depending upon the market situation, I might change it. I might close the position, but that remains to be seen for later. Right now, I'll just move it to 5130. Expecting move to 5210, and then in the best of the best scenarios around 5390 something. Let's say around 5400. So wait and watch. Longs I'm holding and trailing. That's about it for S&P. Let's not put any more time in it and move to our next discussion, which will be the discussion of Nifty 50, which will be followed by Bitcoin. All of these things have worked out. I mean, actually, everything we discussed in the last webinar did. Right, and here is the chart for Nifty. Nifty. Let me just check 1 second. There it is. Keep in mind, guys, we had a bit of a plan here to cover at least the expiries during the week via our separate broadcasts or video recordings or something of that sort. Now, I haven't had the time for it because I'm still out of town, you can say. I mean, I'm in my first office, but there's some social things I had to do and meet a lot of people. So I literally did not have any time for doing that. Once I go back to the second office, then I'll probably have a lot more time. Social interactions do reduce there because of the place it's located at. But anyways, The point being, I'll try to cover it next to next week, most likely. Don't want to get your expectations too high. So, what we have been doing in our last webinar on Nifty, let's just quickly check that before heading over to our current discussion. Somewhere here, we were discussing our analysis on Nifty. You can check the whole thing. It's a pretty lengthy discussion starting around 30 minutes and closing around 39 something. But most importantly, we were suggesting that we will expect resistance around 22500, right? It literally reversed from that. What do you know? Well, you do know, right? Because you watched the webinar. Where is it? 22500. It is there. Look at that. Isn't that cool, guys? Are you still in the chat? Were you able to catch it? If you are not able to catch it still, did you watch it in the last webinar? Use it in your analysis? Hmm. Let me know in the chat if you are there. Nifty followers. If not, in the comment section later on, right? Your feedback is required here, right? Remember how the YouTube algorithm works. Likes, comments, more views, more webinars. Anyways, long story short, not taking too much time on the same thing. We suggested 20 to 500 as the level in the last webinar. It reversed from there, sort of. Now it hasn't completely remember. What I'm saying is, now it hasn't completely reversed. It has just stopped there, right? Good enough for analysis. But what is it really doing here? Let's check that. Bang on. Yes, Jay. That's the word. So, what is it really doing here? Let's now see. Let's see if I have updated anything count-wise from the last webinar. Here is the webinar A down, B up, C down. So count-wise, I think we are same. A down, B up, and C down. Yep, count-wise, we are holding the same view. What is this suggesting? This is suggesting that this was a wave 1 here, and this is a flat correction in play, which is the wave A of the flat. This is the wave B of the flat. Around 20 to 500, it's closing, ending, I should say, and we expect a wave C of the flat. Now we expect wave C of the flat will go somewhere within this range. We have a lot of support incoming here. I personally think it will at least touch 22,120, let's say, which is the lower part of this range, right? So if I remove everything, the minimum expectation comes on to be like this. Now that's a pretty substantial correction if you look at this. Nifty 22,500, 120, almost 380 points. Sorry, 400. So yeah, 380 actually. So that's a substantial move. If you compare that correlation with Bank Nifty, that will be even bigger. Is this a confirmed thing? Of course not. We'll call this as our hypo 2. Straight down. Right? And what is the hypo 1 then? Well, the hypo 1 is that this wave 2, which we are expecting here, A, B, C for the 2, 1 here and 2 here, is probably already complete. That's the hypo 2. Now, how could it already be complete? It could have completed itself here. If it is complete here, then you can guess it already. It's 1 here and 2 here, and then another 1 here of a lower degree, another 2 here of a lower degree, and then correction might be there, minor move, and then straight up strong up leg, right? Now we have completely contradictory analysis here. One is suggesting a move which can take it to 20 to 120. Another is suggesting minor down move and then a strong up move. So what do we do in situation like this? Now, first of all, keep in mind, if it does go to 20 to 120, then that will open up extremely good buying opportunities. At least looking at the things right now, I can say that. Of course, if situations change, if it even goes lower than 21, 20, 120, then I can only comment at that point in time. But right now, if we see something like this point in time will become a very good opportunity to go longs, not just in index, stock specific. There will be stocks which had given an even deeper correction. Keep in mind, it's the index. If the index falls 5%, then the stocks can fall 15%, 20%. Who knows, right? I'm just giving you a rough idea. Stocks will be more. So that can give us a very, very strong opportunity to buy. So if something like this happens, I'll be definitely interested in looking for long trades, right? Of course, the exact situation we'll know at that point in time, but that's the general gist of it. As for the upside is concerned, we do not have concrete evidence that this hypo one is getting played, the yellow count. So what you gotta do is we gotta wait for the market to sustain at about 22,500. Now, how will it sustain about 22,500 is the market goes up, takes a support at this level. Now, that's what we are looking for. If it takes a support at this level, then yes, that's exactly the kind of setup we are looking for, because then we can enter at the break of the last high. Assuming the market goes to 22,650, pulls back to 2,500, then we enter at the break of 22,650, right? That's the kind of setup we are looking for. Simple enough, right? This looks very good in theory. In real market, it might get a little bit complicated. Things will not be this clear as these lines and these pullback arrows. But that goes without saying. You need to have your own understanding of Elliott Wave to actually play these things after all, right? So for the upside, I'll just place an alert. This is not a buying alert. I'll just like to know if the market crosses 22,580 level. Just know that perhaps a long setup is building up. If not, then we wait for the corrective structure, and I have placed two alerts now for the downside movement. So long story short, either a straight up move can be seen on Nifty above 22,500, concluding the analysis, or if there's a pullback, then we can see a pullback till 22,120 and then up leg. Pretty much concludes the whole thing, right? And with that being said, what I like to do is let you guys know that we have a webinar tomorrow. And if you are not already heard the announcement, then I'll just quickly point out here's the registration link 50eyes.com/webinar registration. We'll just check some 6 months of trading records, instruments, P&Ls, etc. by actually diving into the broker's terminal. So very interesting stuff, completely private stuff. It will not be recording, it will be live only. So if you want to be a part of it, definitely log in, or actually not log in, register here. You will receive a link for the webinar once you register on this link with your email ID and name. You will receive it in your mail ID, right? So nothing much to add here. With that, I will just conclude our analysis and head over to our last chart. Yes, Umesh, there is the possibility of diagonal. It is also visible here quite clearly, but I am kind of not considering it, or actually I should consider it. But my point is that because the count is super bullish, I'm not considering it as an H1. It is, let's say, probably like H3. So third possibility, right? So we already discussed two. I don't think the audience here is always mature enough to understand all these complexities. Yeah, but if this one plays out, then it can be not 20 to 120, but it can be much, 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 much lower. That's there. So if the market is completely reversing, then this hypothesis may come into play. But yes, we'll see it or consider it if we see a move below 20 to 120, substantial move below 20 to 120. Let's say if it breaks 22,000, or not really, this 21,900. So in that case, we'll have to consider this as a serious possibility, because then that opens a downward move even below 21,900. Until then, we are pretty much covered with our current analysis. It's already suggesting this kind of move, right? But good of you to point that. So with that being said, let's now head over to our last analysis, which will be the chart of BTC, which is again moving as per our analysis, like as is, right? Pretty much as is. Where is BTC? There it is. Let's see what's going on. And yes, of course, we'll just check our last analysis before heading over to BTC here. We've crossed the 1 hour mark. So here's our last webinar's recording. Somewhere here we're discussing BTC stuff. So I have two charts of BTC which I'm following right now, and this is the one which we discussed in the last webinar, basically suggesting that the market is going to see a possible correction for wave 4 and then a strong leg up. Or the second possibility was we look for a breakout trade. As you can see, I've marked 63,288 as the level. You can check the whole commentary here. But basically, what I pointed out in the webinar was above 63,288, we'll consider a breakout long. Let me see if I play this. Is there anything? Yeah, basically, I'm just pointing out that a breakout long above 63,288 is possible. So now let's check the actual chart and see 63,288. Where is that? So it is here. This is the chart we were discussing in the last webinar. Somewhere here is 63,288. Now since then the market has moved up how much? 8 to 9% roughly speaking. Let's just say 8% plus, and then given a correction, and then now it's heading up again, right? So long story short, BTC, actually that's not the count we were following. Sorry about that. This is the count we are following on BTC. This is the one we discussed in the last webinar, so I should discuss this only. So correction here. Somewhere here we were when we discussed the last count. Do keep in mind if you use different data feeds, a little bit of price variation is there. For instance, this is 69,036. This is 69,000. I mean, you get the point. Minor movement difference can be there. Although in this case, they are both bit stamps. Sorry about that. These are both bit stamps, so these will be the same. So anyways, what I was saying was around 8 to 9% the market has moved up since our last discussion, given a strong correction. Now, what is going on here? That's what we want to discuss. Let me remove this. So this is the possibility that there's a corrective structure for 2. Now, if this is a wave 2, then we can say that it has already completed itself as a flat correction. Flat is an ABC flat like this: A down, B up, and C down. Now, in an ABC flat correction, what you will see is sideways kind of move here, right? If the market extends below this box, right, then that means this is an expanded kind of structure. Now, in this case, this is not a bookish expanded structure, because in the expanded structure, the wave B also goes up substantially. But then again, this is real live market, and real life markets things can go quite different from your bookish examples. So anyways, my point here being that if this wave 2 is complete here, then it is actually open for exceptionally strong moves, right? So if it's open for exceptionally strong moves, that basically means that you can buy here, and technical stop is far low. It is at 59,380 level, and the market is 69,166, and that is a big difference, right? So technically, if you are long, you want to hold a stop here. So accordingly, you can take smaller positions, managing your risk. If not, then I mean, as I said, this whole thing can be a territory for movement. This market can just give a what? 1 second. This market can just give small move up, down, and then up. So it has a wide area to move before taking off for anything substantial. And generally, the markets do like to grab onto these down moves. What it will allow is people who have entered longs here, who have put a stop loss here, to hit their stops. Those who entered longs here and put their stop loss below this swing low, to take their stops, and these stops as well. So once these stops are taken out, the weak hands are thrown out of the market. Strong hands have accumulated the positions, and then the markets take off. That's generally the case, not always, of course. So nothing that we can do about it. That's just the general nature. So this whole expansion, or this whole area, or this box region is a play zone. The market can just move here, right? If not, then we can just see a straight up move here. Both possibilities exist. And here we do have some counts or important levels. I think it was marked over here. Yes, the immediate important level is marked at 73,000, not higher levels. So what I'll do is I'll just place the line here. Coordinates. That is going to act as a possible resistance level around 4% up from the current price level, 4.64%, roughly speaking. And at that point, we may see some corrective structure follow. Right. So accordingly, we can look to trail, and above 73,000, the other levels are 83. This one is at 83,001 something. Not much important. As you can see, these are far, far apart. Generally, if you are holding a substantial position, then the idea will be to book some here, and some here while trailing the whole thing all along, right? So nothing much to add here. It's already going up. It's following the count since quite some time. We have been able to capture multiple longs on this counter. If you have been following the webinars, you would know already. I can't visit every single one of the last webinars and show you. So with that being said, I think we can conclude our analysis here. We have already discussed all the things in quite detail. If you were here till the end, well, that's good to know. And do not forget to hit the like, share the content. At least 4 or 5 people I request you share this thing with. And lastly, most importantly, if you are interested in learning more of how I do things, PNL, etc., then we are holding a exclusive webinar tomorrow. Not sure how you can miss it. It's scrolling down below, but if you have, here's the registration link. Just go there, register, and it will be private only. So you will have to join in, register, and join in to see. With that being said, thank you for staying till the end, and I'll see you in the next one, or as a matter of fact, tomorrow if you are registering. Right. With that being said, I'll close this webinar. Take care, guys, and see you.